Welcome back to Everything Tesla Stock, everyone. The EV market is still suffering from supply chain problems and inflation, but Tesla is still making the right decisions to stay in business. What then has been going on with the American automaker lately? The business reports rising sales and stock prices in spite of these difficulties. However, well-known TV commentator Jim Cramer has a different opinion, even though many investors believe that now is a good moment to expand their holdings in Tesla shares. Jim Cramer suggests that now might not be the best moment to increase share prices. He has really advised Tesla stockholders to liquidate their shares before August 30th. Why did Cramer say what he did? Let's investigate. Before we get started though, please remember to like, subscribe, and enable channel notifications if you like this kind of content, so that you may be informed about all things Tesla. American investor and TV broadcaster Jim Cramer has been well known since 2005 for his Mad Money program on CNBC. Not all of his stock recommendations on the show have been profitable, but some have led to sizable purchases. In spite of this, Jim doesn't hesitate to express his thoughts to his sizable audience about a variety of equities, including Tesla. In the past, Cramer co-founded the financial advice website thestreet.com and served as founder and manager of the multi-million-dollar hedge fund Cramer Berkowitz. In addition, he writes about money management, investing, and building wealth. Undoubtedly, Jim Cramer is a Tesla enthusiast and well known for his fervor for the stock market. But his recent caution about Tesla, which sparked debate among his fans, implies he might be growing hesitant. Rather of holding their Tesla stock for the long haul, Cramer advises investors to think about selling their shares. Although the actual reason for Cramer's change of opinion toward Tesla is unknown, his most recent remarks suggest that he sees difficulties for the EV startup in the future. Cramer recently shared his renewed optimism regarding Ford in an interview. Ford made this change in response to news that it would almost increase the yearly production capacity of its planned electric F-150 pickup truck to 150,000 units by the middle of 2023. Cramer claims that Ford is planning to create 200,000 battery-powered vehicles by 2025, in addition to starting to produce inverters and batteries. He pointed out that Ford has a solid history of success with pickup trucks and expressed optimism for the future. Ford has long established large-scale production facilities, in contrast to Tesla, which is experiencing growing pains as it grows its factories. Thanks to Cramer's renewed zeal, Ford's shares rose over 10% to over 24% early this year, hitting a new 52-week high. Additionally, Cramer attacked Tesla's Cybertruck, speculating that it might be Elon Musk's first significant failure. Considering that Cramer has previously backed Tesla's audacious endeavors, this assertion is unexpected. Strong pre-sale orders for the Cybertruck have Cramer skeptical. He might think that Tesla is dealing with serious issues, such as inflationary pressures. Tesla recently revealed lower than expected quarterly profitability, which it blamed on several vehicle pricing increases. Musk said that these increases were unnecessarily steep and would hurt demand. The Model Y long-range version is currently priced at $65,990, a more than 30% increase since early 2021. Tesla has increased prices multiple times this year. By year's end, Musk anticipates that supply chain disruptions and inflation will have subsided, stabilizing commodity costs and possibly allowing Tesla to cut prices a little. However, the situation is quite difficult right now. Elon Musk says the problems with Tesla are more with production than with demand. Tesla has failed to fulfill its targets for this year, including a 50% increase in deliveries and 5,000 cars per week from its new factories in Berlin and Texas by the end of the year. According to Morgan Stanley analysts, manufacturing issues are putting Tesla under pressure to maintain margin in the near future. While Tesla is still a leader in innovation and has set high production goals, it has also encountered difficulties and setbacks, frustrating supporters who were hoping for new ventures. Because of this, Cramer has conjectured that Ford, with its proven production capability, would surpass Tesla in several market categories. Tesla's stock performance has been impacted by worries about its capacity to compete in the face of growing supply chain restrictions and competition. Potential financial difficulties were indicated by Tesla's $16.93 billion overall revenue decline from $18.76 billion. Tesla's move to liquidate the majority of its Bitcoin holdings, citing worries about liquidity in the face of volatile market conditions, was another noteworthy step. Given the persistent difficulties, this action might be a reflection of Tesla's strategic financial strategy. In spite of these immediate difficulties, Tesla just released quarterly results that were beyond forecast, with $16.93 billion in sales and $2.27 in earnings per share. Additionally, it raised its cash position to $18.3 billion, which caused its stock price to rise by 4%. Despite its current challenges, Tesla has hope for the future. Although Jim Cramer's worries about the state of the market are legitimate, Tesla has a track record of overcoming obstacles and leading the way in innovation, so it could be able to continue growing. But given the volatility of the stock market, investors should carefully consider their choices before making them based on personal convictions. What do you think? Should investors sell their Tesla stock according to Cramer's suggestion or stay onto it? Please comment with your thoughts below. Please click on either of these two videos to view it on your screen while you're here. I'll see you over there. Music. Meet Kevin says that given the current situation, this is typical and that investors shouldn't be unduly alarmed by these layoffs. Tesla will be able to boost profits during the crisis by eliminating some overhead, which is precisely what investors want to see if some employees are let go. In his Tesla videos, Meet Kevin mentions the impending earnings recession, which makes this particularly beneficial. When a business experiences consecutive quarters of negative revenue, it is referred to as an earnings recession. Some large corporations are already experiencing this. Nike, for instance, has frequently reported negative revenue of roughly 5%. Reducing costs by making layoffs can help prevent this scenario and maintain the company's growth, as Tesla has demonstrated. As a result, as Meet Kevin reveals in his videos, a lot of actions that initially appear to be negative indicators for the business actually serve as deliberate measures taken by the organization to guard against difficult and unpredictable times. The company's healthy cash flow is another indication that Tesla is performing admirably. As Meet Kevin points out, money is entering Tesla every day rather than leaving. It's remarkable for a startup, particularly in the auto sector where a large number of U.S. automakers have declared bankruptcy. It appears that Tesla will be able to escape this fate. But if Tesla's cash flow is negatively impacted for whatever reason, many investors may become hesitant to make investments, which might have a negative impact on the company's stock price. However, Meet Kevin's analysis indicates that Tesla's cash flow is expected to be positive for the time being. In summary, Meet Kevin's video indicates that Tesla's price per share won't drop much more, and we think it won't drop below $600. There are numerous indications that Tesla will recover and that its share price will rise sharply over time. In just 4 years, Meet Kevin estimates that the price of a share of Tesla should reach approximately $2,200 USD. Please share your thoughts with us regarding Tesla's future, though. Post your forecasts and predictions in the comments section below. I appreciate you seeing. In addition to liking and commenting on this video, please watch the rest of our videos and, most importantly, subscribe to the channel. Select one of these two videos to watch on your screen while you're still here. I'll see you there. While keeping the text's original organization and content, this version has been edited for grammar, punctuation, and clarity.